Hello, everybody. Thank you for joining us. We'll be starting shortly. We're just allowing for a few more people to actually join this webinar. So please bear with us with the silence that will be forthcoming as we wait for people to join. Okay, so we'll just give it maybe one more minute and then we'll actually start, if that's okay. I hope everybody's managed to click in okay. Just for context, we will be speaking to you all, obviously from Dubai, but you guys, some of you guys are on the East Coast of America, some are from the United Kingdom, and the others are from India. So spread across the world. So one more minute. Actually, it's 2 minutes past. So do you know what? I'm going to start. So, ladies and gentlemen, I just want to say good morning, good afternoon, and good evening. Thank you for joining our webinar today. Now, my name is Mario Volpi, and I'm the Senior Vice President at Allegiance Real Estate. Just for context, I've actually been in real estate now for 42 years. I write a weekly property related column in the national newspaper, and I appear on numerous podcasts, namely the Dubai Property Podcast. So I feel I'm relatively qualified to speak about these issues. I'm going to be passing the microphone to my colleague Chinoy Kapoor. He is the Vice President of Luxury Sales. He looks after one of Allegiance's more successful sales teams, covering not just Dubai, but Abu Dhabi and Ras Al Khaimah too. And lastly, then we will also be joined by Nauman Malik, our secondary market director, who will be on hand to talk about the secondary market and answer any questions related to sort of the ready property. Now, our role today is not just to present the market, but actually to help you to understand how to navigate it with clarity and with confidence. We will shortly present to you some facts about the UAE real estate market in general, whilst focusing specifically on Dubai and what it will mean to you as you have already invested here. Now, after our presentation, you're going to have the opportunity to ask questions via the text button, or if you wish to ask the question personally, you can raise your hand by pressing the raise your hand button and we'll let you in. Please get your questions in early as we will endeavor to answer as many as possible. So let's start now and let's just allow me to share my screen here. Just bear with me 1 second. Technology for you. Okay. Oops, sorry. That's my phone. Live TV, as they say. Okay. So, just to put things into context, I'm sure we're all perfectly aware of what this region has gone through these past sort of 5 weeks or so. But let me start by setting the context because things have shifted since we originally put this webinar together. We've now had a 2-week ceasefire announcement between the US and Iran, and importantly, the supposed reopening of the Straits of Hormuz is part of that. Now, what's interesting is how quickly markets reacted to that news. Oil prices eased, obviously. The Gulf markets moved up. So what that tells us is that the immediate risk premium was already starting to come down. But at the same time, we should be realistic. not just because this is a temporary pause, it's not a full resolution, but there's much confusion surrounding this ceasefire. But we should obviously remain positive. I'd frame it this way. We're moving out of a high risk phase and into perhaps a more stabilization phase. And as long as the ceasefire holds, we'll be fine. And that's important for your investments. So let's talk about the market resilience just for a minute. Now, the key point I'd like you all to take away here is very simple. The market held up even during the peak of uncertainty. Transactions were still happening, buyers were still active, the system itself continued to function. Yes, activity did slow, especially in early March, but it didn't freeze. In fact, the Q1 data that just came out recently, that showed that the Dubai property market delivered another record with transactions up around about 30% year on year, with over 61,000 transactions done. Clearly, the heavy lifting was done in January and February, but even during the difficult days in March, we still saw sales continuing, albeit at a much slower pace. And that's very important because it tells us that you didn't invest in a market that's broken. You invested in a market that absorbed pressure and kept moving forward. And that's a very strong position to be in. So what does this actually mean for you? Well, and your investment, obviously. Well, tensions eased. The impact is not theoretical, it's very practical. What we are seeing, we're seeing more stability in trade and movement. Travel confidence definitely has improved. And most importantly, investors are becoming more comfortable making decisions again, albeit very slowly, but they are becoming more comfortable. And that directly affects Dubai specifically and the whole of the UAE generally, because your investment is driven by people relocating, by capital moving, and obviously by buyers actually taking decisions again. So what's happening now is not that the demand suddenly reappears, it's that the hesitation is starting to disappear. And that's a good difference. But let's look at some historical context here. I think it's important to give you this perspective because naturally, situations like this bring back comparisons to 2008 and the global financial crisis. Now, despite a true systematic financial collapse back then, Dubai stabilized within a few years. Recovery was strong, and that was driven by global capital and major improvements to regulation and legislation. But this time it's very different because back then the entire financial system was under stress. Liquidity dried up, banks weren't lending, and that directly impacted property. Today, that's not the case. Even during the chaos of the conflict, the financial services system was functioning, banks were lending, transactions were happening, capital was still here. So what we're seeing now is not a collapse, despite whatever you might be hearing in your home countries, in the press. It's not a collapse. It's a temporary pause driven by uncertainty. And now, with some de-escalation coming in, we're moving back towards some form of normal conditions. We're not rebuilding from damage, but from a strong foundation of robust fundamentals that never really disappeared. This slide, I call it the opportunity window. This is where I'd like your full attention, please, because this is where timing comes in. Right now, we are in a bit of a transition phase. We know confidence has not fully come back. Buyers are still very, very cautious. And because of that, developers are now offering better than usual terms. By this, I mean DLD waivers, easier payment plans. Some are discounting their prices, but only in return for more down payments and even some extra incentives in the form of cars and even guaranteed ROI. But these conditions don't last. And that's the bit I want to emphasize. As the confidence returns, these offers will disappear first, then the pricing adjusts. So this phase we're in right now is actually quite unique. And typically, this is where more experienced investors start positioning. This slide, I actually wanted to sort of show you some things here, because one of the things is to consider is what's likely to happen in the future. Well, one thing is for sure, and this one is probably one of the most important factors looking ahead. We're now seeing construction costs rising, and quite significantly. Steel, glass, cement, logistics, all building materials, they're all increasing. And this isn't just local, it's happening globally. Now, why does this actually matter to you? Well, because property prices aren't just about the demand. They're actually about the costs of building the future projects, obviously. So if future developments cost more to build, they will be priced higher, even if demand stays stable. Prices are naturally pushed up from the supply side, which means what you've bought and what's available today is likely to be at a more favorable cost base than what's coming next. Opportunities like this will not last. So there may be a window now to add to your investments. So I just want to finish up by saying that if we can bring this back to you and your position, you've already made the decision to invest in Dubai. And importantly, you've entered before full market normalization. Now, what now matters is how you manage that position. Now, if you hold strong assets, this is a moment not to react emotionally, I would say. It's a moment to stay disciplined. And if you're considering expanding your portfolio, well, you're now looking at a window of opportunity where risk is definitely easing. Confidence hasn't fully returned due to investor competition being low. Developers are still offering favorable terms, and future supply will definitely become more expensive. So the opportunity today is not driven by the hype, it's actually driven by timing. You don't invest based on the headlines. You invested based on the fundamentals, and they haven't changed at all. So the real question now I have to ask is, do you strengthen your position before the next phase of growth or after the market has already adjusted? Now, that's the question you should focus on. Now, this concludes my part of the webinar. I'm now going to pass you over to Chinoy, who will talk to you on a more specific macro level and dive deeper into what these developers are actually offering. Thank you very much.
Thank you so much, Mario. And thank you everyone for joining us today. Greetings from Allegiance Real Estate here out in Dubai. So just breaking down the numbers in terms of UAE as a country and the most popular Emirates, which are always in demand in terms of especially real estate. I mean, Dubai in the month of March, which was the 30-day extensive period of back and forth headlines that everybody was exposed to around the world. I mean, Dubai did around 13,500 transactions, which totaled to around 31 billion dirhams of business. That's a number to definitely be looked upon. Apart from that, Abu Dhabi also saw around 3.8 billion worth of transactions. Definitely, it is fairly lower than Dubai because in Abu Dhabi is a more regulated market, more government developer-backed market as compared to Dubai, where you have a lot of private developers and a lot of developers building a lot of real estate. Ras Al Khaimah, where the iconic Wynn Casino is coming in, also contributed to around 1.2 billion dirhams in transactions. And keep in mind, most of across these Emirates, more than 70% of the transactions were off plan. Now, we do understand we are in a very uncertain time, but keeping in mind, in terms of the total UAE as a whole, if we calculate around 18,000 transactions happen. Now, all these transactions got registered during the time of the situation that we were in. Now, all these buyers had the option to actually back out or actually cancel of what they actually bought, but they did not. And as Mario rightly said, they stuck to the fundamentals more than the hype. The market before was also operating on a little bit of a FOMO, where somebody was buying and then he would tell his friend and then he would also want to get on with it. And there were a lot of first time cycle buyers. Now, if we do an analysis in terms of what transactions that have happened, the buyers can be classified into three different types of buyers. We have got the institutional investors. We have the big institutional firms that are acquiring assets across UAE. Then we've got the retail investors, and within the retail investors we've got multiple kinds of investors, those who some are going through their third cycle of investing in real estate. And when I say cycle, that means they bought in early, they sold or they rented, and then they bought again, and then they sold again. And post COVID, what we saw that 2021, where the real estate market actually picked up, now we see a lot of first time investors in the market. So that brings us down to the 5590 rule. So in order to understand this rule, I mean, in every market, whenever there is a situation and whenever there is a little bit of uncertainty, there are 5% of the market which would definitely look out for opportunities. There is 5% of the market that would definitely look out into exiting or into ultimate liquidity or immediate liquidity. And then there is 90% of the market where the buyers and sellers, they just want to wait and watch. And this is the exact carbon copy of what exactly happened in COVID and what is happening right now. Now, where is the opportunity? We as a company, as Allegiance Real Estate, have been helping our clients to enter and help our clients also exit. Now, a lot of misinformation is there in the market. I'm just here to give you and help you clear out some myths. I mean, a lot of people talk about a lot of distressed deals coming out in the market, 15% below the market, 20% below the market. Well, it is true because those kind of deals were already surfacing in the market when the times were healthy at, let's say, 5% below the market. And during this time, the sellers wanted immediate liquidity. Now, a seller could be a retail investor who just wants to cash out so that he sees more opportunity, let's say, in his business, or he sees more opportunity in a different kind of investment where he can take advantage of this situation. So not every seller is selling in this market just because the market is bad or he wants to exit. Because keep in mind, COVID was a tougher time. And I was here in COVID. So I can speak with full confidence that it was an ultimate freeze. And when I say freeze, means we were shut in our homes. We were not allowed to go outside. At least in this uncertain scenario, the flights were running. The cargo was coming in and out. I mean, we were going to our offices. The businesses were running as usual. Obviously, tourism as an industry definitely took a hit. And I mean, tourism has always taken a hit in terms of uncertain situations, but it's always about, as Mario rightly said, the fundamentals. No property buying tax, no property renting tax. I mean, you can always, this is an ecosystem built for investors to flourish. And in order to back that up, now the transactions, when they actually slowed down, the buyers, the 90% of the market, when they were watching the market, developers had to come up with certain offers. And what Mario was was mentioning to you was definitely there were developers in the market breaking down into emirate by emirate, like Abu Dhabi, where Hudriyat Island and Al Reem Island as two iconic locations, where every project was a sold out. Even in the month of March, when they released certain inventory, all the launches got sold out. All the units that came back into the market got sold out within hours. Again, that goes to three things: obviously the fundamentals that we've been talking about, but the location and the kind of payment plan and a government-backed developer. So there, even the government came back and they offered a relief to the market. They came up with the 2% or their DLD waivers or their property registration fees waivers. So there was always an incentive on the table for the buyers to take advantage of. Same goes for Dubai. I'm not going to say that every developer is offering certain discounts. Price discounts are off the table because it is very unfair for the previous investor. Anybody who has joined us today, you can be assured that if you bought at a certain pricing, let's say a phase one pricing or a phase two pricing, and if today the phase three is selling within that same development or the project, the prices have not changed. The prices have held. The prices have grown phase over phase, and they have definitely held in the market. The benefit that the current investors operating in the market can take is the offers, the payment plan relaxations. Like a lot of developers came up with a payment plan where they were like, okay, the 90% of the investors, they want to watch the market. All right, let's lock in the offers at a 5% or a 10% down payment, and let's watch the market together. Now, why could a developer do this? Because this market is not like just any other market in the world. It is very regulated. Now, any developer who has to launch a project, especially an under construction project, if they have to sell the sand, they have to put 30% of the overall project value into the escrow account, which is a regulated account. And it's also like a cash guarantee, which stays with the government locked. Any payment that any investor makes against the property purchase, that money is going into the escrow account of the developer, which is again a regulated account between the developer and the government of UAE. So your money is always safe and secure. Not everybody can be a developer in the UAE ecosystem. Only the cash-rich developers are here. So having said that, I mean, we saw during these times that there was ultimate governance. Now, when we talk about ultimate governance, I mean, the government released relief packages for businesses locally. Obviously, the businesses did take a hit. A lot of businesses rely on tourism. A lot of businesses rely on trade. A lot of businesses rely on the movement of materials in and out of Dubai. So government gave relief packages where they were supporting the businesses. They gave relief packages in terms of annual renewal fees. The government gave relief packages in terms of employee support, so nobody's salaries get stuck. So we are also working in an organization where we are being supported by our own management, and we do not see any difference in terms of a crisis. I mean, I as an investor would definitely be worried when, as Mario pointed out, that this is not a financial crisis. People still have money. The flow of money is still there. It is just a situation where people do not know the answer of what's next. And it's purely because of how the information in the headlines has been delivered. Now, smart investors are definitely looking a layer below the headlines, and they know that this is the opportunity. Now, just to wrap it up on my section, I mean, just within these times of the situation that we were in, Nubank, which is the number one digital bank from Brazil, is planning to open its headquarters in Abu Dhabi. We saw a $250 million investment from Blackstone into Abu Dhabi, into the gaming sector that Abu Dhabi is building on. Abu Dhabi is building an EA Sports gaming island, which is going to be one of its first kind in the world. And Blackstone has invested $250 million into that. Apart from that, from the Singapore sovereign wealth funds, I mean, one of the biggest capital management firm, Hill House Investments, has opened an office also within the UAE. Hill House Investments is a $100 billion firm. So more and more firms are coming in. And again, it always comes down to the fundamentals. Yes, fundamentals can be an overused word, but here we are trying to break it down for you to help you understand that a lot of headlines are not reaching the world. But what's happening in the ground reality right here is what we are watching, and it's what we are trying to convey to our investors. Now, during the times, you can always go back to our LinkedIn. You can always go back to our social media. We as a firm have been doing transactions. And again, as we always tell our clients, that we are on your side, and we know the kind of developers that we can make you enter in this market, and you will always have an upper hand above the others. Not in terms of price, but it's not always about the price where you win. You also win on leverage. You also win on payments, your cash flows. So we are happy to always understand that and guide you towards the right assets to be acquired. From a standpoint of a luxury market, there were two very big striking transactions that happened in the market. Marsa Al Arab saw a villa rental deal for 20 million dirhams for 2 years, which was 10 million dirham rental, happen during the time of war. Burj Khalifa saw a penthouse being renewed at 12 million dirhams, a rental deal being renewed for 12 million dirhams, right? So again, This is purely from a luxury market standpoint where people are still putting in their trust. Anthony Joshua, I can take names of a lot of celebrities who have actually invested during these times and registered their units. Armani Residences on the Palm Jumeirah saw another transaction where a celebrity also acquired a penthouse on the Palm Jumeirah as well. So, I mean, the opportunities are definitely there. It's always about partnering up with the right partner to be guiding you throughout the entire process. And now I'm just going to quickly pass on the mic to Noman, who is the head of our secondary market. When we talk about secondary market, we talk about the ready assets that we also manage as a company. Because we at Allegiance, we are not just about buying and selling, we are also about managing your properties through long-term rentals, through short-term rentals, converting them into holiday homes, bringing in that passive income for you as well, and making your property a cash generating machine. So over to Noman. Any questions regarding how your property should actually be valued? We have an absolute expert right here within our company. Over to you, Noman.
Yes, hi everyone. My name is Noman. I am head of secondary market here in Allegiance Real Estate. And I'll just quickly tell you about myself. I've been in banking for 15 years in United Arab Emirates. I've been working in a position like branch banking and also in wealth management. And I've been in real estate for the last 5 years. And now I'm heading the secondary market division here in Allegiance Real Estate. So my focus would be on looking at the portfolio what you have right now, all the investors which we have right now. The most common question we are getting right now is a reassessment of their portfolio. So, and it is of course very important to see in for every investor at every stage, especially in a stabilizing stage, that how their investment portfolio is performing. Now, there's a very common myth in the market that if you are invested in a same city, you will get the same results. And if you are invested with the same developer, every property that developer has will give you the same results. And also, if you have invested in the same community, you'll be able to get the same results, which it's actually not the case. We always talk about location, location, and location, which is exactly what it means. Like you are, of course, choosing the right location when you're buying a property, you're choosing the right location within a building or within a community or a cluster. So, okay. So a very important mistake which all the investors make are, of course, they are more emotionally attached with the property in a situation like this, and they just hold on to the property, just assuming that their property is doing well, considering or comparing with another property, which is, of course, in a different area or a different market or different community, and not looking at it in comparison with the properties which are similar to that property, and they're not performing or comparing the property with the real comparables. So there is a reality check, and there's a key question for every investor: that is my property really performing at the moment? And there is very easy way to gauge this one: is what is the rental yield I am getting in comparison with the overall market? What is the capital appreciation which I am getting in comparison with overall performance of the market? And how liquid is my investment? Like if I want to go back into the market, how much is demand for my market? We have been receiving inquiries about the properties even in these times, and this is the right time to gauge that which property has proper demand in the market and which property does not have a similar demand. So, for example, if you talk about the end user market, we were still getting a lot of inquiries for the end user market. But if you compare that with another property which is more towards the holiday home business, the inquiries were not the same. So this is the right time for the investors to check where their property exactly stands, and especially if there is a pressure on the market, if their property is able to hold on to that pressure. Now, whenever there's a market shift, we can easily see like which area is performing better, which area is stabilizing, and which area is more towards the underperforming area. So why it is important? What I suggest to all my investors, and we as Allegiance, would like to suggest to all our investors, and also people who are not invested with us or not work through us, and this is the very best time for them to go back and reassess their portfolio and get your properties and get your portfolio as a whole revalued from an independent valuator or a proper specialist of that area. So what would be the real positioning of a property? Like, how much is the true market value of the property? What is the rental potential? If it is an off-plan property, what is the closest comparable? And if it is a ready property, how much is the rental potential at the moment? And how much is the demand? Like, which segment has more demand in the property? And again, as I said, regarding the liquidity of your asset, and what is going to be your exit potential, like if you want to exit the market. And now at the same time, there's some hidden insight which we can provide, that if the value of the property is perhaps overvalued or it is underperforming at the moment, and how you can switch to a better portfolio at the same time, and without, maybe you can change from one asset to another asset. Now, not all assets we recommend are supposed to be sold, or we can recommend on when you should hold the property, or when it is a good time to exit that investment. Now, based what point would be there to make this decision? What is the rental yield of that area? What is the demand of that property, and how good is the location of the property? And we will suggest to our customers when it is the right time, or is it the right time to exit the property when the property is not giving you the best yield? There is a risk of oversupply in the market, and if there are other better opportunities available in the market. So what we recommend, again, sell the underperforming assets, reinvest in a stronger opportunity, and increase your ROI. And there's a case scenario where you can easily check if your property you're holding an asset which is giving you a yield of 5%, and there is no capital growth on that property. At the same time, you can switch to another property which is giving you a yield of 7 to 8%, and at the same time, there's a huge potential for the growth as well. And at the same time, also, there are off-market opportunities which CK also talk about. You can also have access to that. So there are 3 steps to start smarter investment decisions. As I said before, get an independent valuation done. Analyze the performance based on what indicators I have mentioned earlier, and decide whether it is the right time to hold or exit that property, or upgrade to a better investment. Okay, I just pass on to Mario again.
Okay, thank you very much, Nauman. So look, if you would like to have a one-to-one private consultation, or if you'd like to find out more about the true value of a property that you're currently holding, then obviously please get in touch with us via the email that will be shared with you at the end. Now, we do have some questions. This is the part where we turn basically this webinar back on its head and back to you. We really want to hear from you. So please don't be shy. I'm sure you have lots and lots of questions that you would like to ask. Don't be shy in actually asking them. We do have a few, so we're going to start by answering those. But I'm really asking you all to dig deep and type in some questions. Or if you feel you'd like to actually ask it on air, please click on the raise your hand button. So the first question that has come in is actually from Julian. And I'm going to pass this one over to Chinoy, who I think is more qualified to actually answer it. So over to you, Chinoy, for Julian's question. You're on mute.
Thank you so much, Mario. So Julian asked about, do you feel an oversupply of branded luxury residential buildings will create a flatness in the market pricing, perhaps even a decrease in demand? So just to answer your question, Julian, and break it down into 2 parts. In terms of demand, right now, Dubai stands on 88,000 millionaires and 234 centimillionaires. In the world, we have more than 50 million millionaires, which is the US dollar millionaires that I'm talking about. So when we talk about the gap in terms of how many more people can actually enter the market, the gap is very big and the opportunities are way bigger in terms of demand. Now, talking about the branded luxury residential, this is definitely a segment which is very much undersupplied in the market. It is not the segment where this is actually a segment which operates above 5 million dirhams, above 10 million dirhams. The segment of properties between 1 million to 5 million dirhams is where the major supply is coming in the market. I'm sure everybody has heard about the points where Dubai can have a saturation. And I would say, again, the the demand in terms of each different sector of people moving in. Affordable housing goes to the people who are moving here for jobs. Luxury market moves for the people, those who are coming here with their businesses. And then again, we have different areas where people operate in, where you have luxury villas of a little away from the city. You've got your prime seafront residential properties, and then you've got the branded residences, which definitely elevate your lifestyle. So, Julian, just to summarize and answer your question, we do not see in the coming future for an oversupply of branded residential. We would actually want more branded residential to come in the market because we have more inquiries for it. In terms of how UAE and Dubai has positioned itself to the world. But for now, we do not see any saturation coming in, and the demand holds very strong.
Thank you for that, Chinoy. I believe somebody has raised their hand. So if you would like to step up to the mic and ask your question, please go ahead. It's Mijanru Roku. Mijanru, thank you very much for joining us. First of all, can you tell us where are you listening from?
I'm in Texas, Houston, Texas.
Amazing, amazing. Go ahead and ask your question.
The question is, if the Pakistan negotiation gets successful, war is over, but based on last 40 days, what happened in Dubai, what do you guys see the market in future after that, even the war is over? Will that be a good time to buy in a month or within a month or after few months?
Well, if possible, I think all three of us should actually answer that question. I can give perhaps an overall. Chinoy can talk about perhaps what the off-plan market can do, and obviously Nauman, being a fellow Pakistani as well, a negotiator, he can put his stand on it. Look, from my point of view, it's all about sentiment, and there's two things to look at here. The sentiment, obviously, whilst we're in a crisis, or at least were in a crisis, we are still. But I'm the positive guy. I'm thinking, as soon as we reach an agreement, we will obviously get better. It will take time. But the two things I want to say is that it'll take time for the sentiment to come back. And so you're saying, is it a right time for for an investor to come back to the property market once everything has been resolved? The straight answer to that would be yes, but I would also actually urge you, Mijan Noor, if possible, look at exactly what Chinoy was talking about earlier. To actually not just get the property you really want, because let's be real here. A few months ago, or certainly the tail end of last year, to get the property you wanted was a bit of a lottery. The competition was very, very high. You would put in your expression of interest. You never knew whether the expression of interest that was lodged by the broker had a great contact with that particular developer or not. So you were never even assured of getting the exact unit you wanted. You had to rush. Maybe mistakes were made, and maybe you wouldn't get it. Right now, you don't have that kind of competition. So I'm asking investors to look at the possibility of actually proceeding with something now. Now, I know that sounds like a salesman's pitch. Trust me, it isn't. And the meaning behind it is purely and simply because if you feel that Dubai and the wider UAE is the place to invest in, and you should do, because as Chinoy and I said before, the fundamentals haven't changed. Dubai was amazing and continues to be amazing. In fact, now it's even more amazing because now we realize that we can actually defend ourselves, which we didn't know we could before, despite whatever comes forward. So I would say that, of course, the market will get better if we have a resolution. But as that goes on, nobody knows exactly how long people will wait or still hesitate. But I would say if you are a what the Scots call a canny investor, I would suggest you start looking now because those benefits, especially if you're looking to buy an off-plan property, is available now. DLD waivers, better payment plans, deferred payment plans, post handover payment plans. I mean, the list is endless. One thing that Chinoy perhaps forgot to mention, I mean, there was one developer who's never done this. They're offering guaranteed ROIs for 5 years. I mean, they're doing that to entice you in now. These will disappear. So, my answer would be yes, and think about doing it sooner rather than later. Over to you, Chinoy.
Yeah, I think Mario, you touched base upon all the points, and every point hits the nail. I mean, Mishanur, I mean, what I can only add from a recent case study. Me and my entire team, we were representing a couple of buyers who were very watchful of the market, and they always felt that Dubai is a bubble, which again, everybody has a different side of opinion, and they see the market very differently. But again, as Mario pointed out, the fundamentals stay strong. So we had a buyer who was eyeing a good commercial property, like an office, for a very, very long time. And we were representing that buyer. Now, if I were to tell you that we were able to pull out not just 4% DLD waiver, but also the VAT waivers, which were never a conversation that the developer ever entertained when the market was a pure seller's market. Whenever there is a pause, the market flips and it is a pure buyer's market. I mean, we have been seeing where developers are open to open a dialogue. They are open to conversations. Now, as Mario pointed out, I mean, before this was never even off on the table. So can we get a price discount? That is again depends upon developer to developer. My advice to you would be is always eye out for a tier one developer and a tier one location. If you can match both, then you have a very safe investment on your hands. And if you want to be 100% assured and you think that you want to make the right decision, so you can choose a low risk investment in a more stable area, more developed area, which is, let's say, prime downtown or prime areas where the entire residential is already ready. You can probably enter not in phase one, but in phase three or phase four, where the concepts have actually been proven. So that just mitigates your risk, but that also dilutes your upside in terms of your returns. So, Mijanur, I mean, from an off-plan perspective, there has never been a better time. From a secondary market, I think I have Noman who can definitely share more insights for you.
Yes, I definitely. Yeah, I got a question here, which I would like to answer that how the secondary market is doing, how a resale market is doing right now. It is from Mr. Sushidha. And well, this is a very, very common question we get every now and then, and every single day. I'm getting this from my own investors, of course, the new buyers as well. Look, nothing has changed in terms of the demand for the property. The only thing which has changed is the decision-making process. I mean, this is not the time when we also push the clients towards decision-making because of a bit of uncertainty in the market. But overall, as I mentioned before as well, not all areas have received similar demand, but there are end user markets which have continuously received similar amount of the inquiries. We have been actively showing them properties. We have actively been replying to their inquiries, and at the same time, as I suggested before, this is a very good test for the market as well, or for the investment portfolio as well, to see where is that heading. So overall, we see the market going in the right direction. It's just that the decision making is a bit slow from the buyers, but at the same time, another parameter to gauge this, as the mortgage policies are still the same over here. I mean, the lending policies have not changed. Whenever there is a distress in the market, the first indicator is the banks. They start getting strict on the lending part. But we have not seen any changes. The valuations are coming exactly at the same prices, whichever property we have sold. So overall, what I see is resale market is still doing strongly and going in the same direction.
Amazing. Thank you, Nauman. So back to the questions, an anonymous question here. Which developers does your company represent? Well, the straight answer to that is we can represent pretty much every developer. However, we do focus only on a few. Now, something that I forgot to say at the beginning, which is terrible, is just who Allegiance is. Now, we've been founded since 2019. Primarily, we are an off-plan company, or at least we were opened up as an off-plan company. But we also do secondary, as you know, because Nauman and his team obviously do secondary as well. And as a result of the sort of 6 years of trading, which, by the way, we also have offices in Riyadh, in Beirut, in Sydney, in Paris, and in Tokyo, obviously, as well as Dubai. So, we've spread ourselves out to help foreign investors as well. And that's been on the back of a lot of the roadshows that we actually do. So, we are an international company, and that's why we do have so many international investors. And obviously, you hopefully some of you are here tonight. Now, but the main developer that we deal with, or should I say the developer where we as a company, we are their number one producer of sales is Damac. We work very closely also with Shoba. We're very high up on their list as well. Beyond, which is a developer part of Omniat. We deal with Ellington, we deal with Emaar, we deal with obviously Dubai Properties, which has Nakheel and Meras. And in fact, so all of these sort of Emaar, Dubai Properties, Nakheel, Meras, these are the ones I think that Chinoy was talking about. Damac definitely is tier one, and a lot of all of these ones that I mentioned are tier one. Bengati is another developer we work with. In Ras Al Khaimah, we work with the Iraq government. In fact, there was an interesting stat last year. For every 11 properties that Ras Al Khaimah sold as an emirate, Allegiance sold one of those properties. Now, that is an amazing statistic, and something that we're pushing to try and do in Dubai as well. So that's all credit to Chinoy and his team. So these are the sort of the major ones we use and offer projects to our clients. But other than that, we will deal with anybody, because now the escrow account is in place. I say now, it's been in place for a while, and that gives full protection to all the investors. Whereas pre-2008, the escrow law was not in place, and that's unfortunately why when developers defaulted due to no liquidity and everything, they were able to sort of run away, and people lost their money. Whereas now, even if a developer was to run away now, the investor's money is ring fenced and is 100% safe, and you'll be able to get your money back there. Next question from Harry Singh. I'd like to perhaps pass that over to Nauman. It says, what is the cost to manage a property?
Yes. Hi, Harry. Thank you very much for your question. Look, it depends on what kind of management are you looking for, but normally the management companies, they charge 5% of the rental value if they are renting the property on your behalf. And at the same time, if it includes, this includes a comprehensive service starting from renting the property and until the maintenance of the property, taking care of all the questions from the tenants. So as generally it is 5% of the rental value of the property.
Amazing. Okay, I'm going to jump one to start off with here, and perhaps ask Chinoy to put his comments on this. What about Al Quwain for a long-term hold of 5+ years? I know I have some ideas on that, but Chinoy, if you can put your spin on that, given that Shoba has now linked up with the Al Quwain government and is redeveloping the whole of Al Quwain beachfront.
Absolutely, Mario. You are absolutely right there. Quain definitely is an interesting emirate to look into. There are different kinds of drivers that will fuel the demand within that emirate. The government there has become very proactive and they're very serious about the development of that emirate as well. Obviously, a lot of that has got to do with the iconic Wynn Casino coming up. Quain is the emirate which is the closest to Ras Al Khaimah and the iconic Al Marjan Island, where the $5.1 billion Wynn Casinos and Resorts is coming in. I mean, when we talk about Wynn Casinos and Resorts, it's the Rolls Royce of casinos. It's not just any casino down the block. So they have um, the pull to create experiences and to draw the tourism out. I mean, just a very average statistic, which can definitely help, is that Wynn Casino in itself has 11 million loyal subscribers all over the world, out of which somewhere around 50 to 60,000 are their high rollers. So a lot of tourism is definitely going to be um, dropping into Ras Al Khaimah, and Ras Al Khaimah right now does not have that amount of supply to cater to that tourism. There is a major gap in hospitality in Ras Al Khaimah. There are not a lot of hotels there. That's why getting early into Ras Al Khaimah and Quain can definitely be advantageous. And again, keep in mind, just if even if you do not look at the principle of Wynn Casino or Ras Al Khaimah Al Marjan Island supporting the Quain Emirate, you can never go wrong with a seafront property. You are directly on the coastline with a direct beach access of the developments that Shobha is bringing in there. And they are actually revamping the entire Quain downtown. I mean, the master plan is definitely something to be watched into. The prices are on an all-time low. Like right now, a one-bedroom sea facing you can get in the price of 1.3, 1.5 million dirhams, which definitely does not exist in any emirate across Dubai, Abu Dhabi, or Ras Al Khaimah. I mean, in Ras Al Khaimah, if you're looking at a one-bedroom, full sea views directly on the beach access, you're looking at a price point of 2 to 2.5 million dirhams. In Abu Dhabi, you're looking at a price point of again 2.5, 2.8 million dirhams. And if you're looking in Dubai, then a one-bedroom sea facing is going for 3.1 million dirhams. So definitely, you are absolutely right. I would not say a 5+ year hold. Definitely, it's an opportunity to acquire a good seafront property and just hold it and convert that into a holiday home. If you were to do business with us, we manage your properties as well. So we are the one-stop property management solution company from buying to managing as well, and put that property into a short-term rental property because 12 months from now, the iconic Wynn Casino is opening. And any property that will be in and around the casino will definitely see a major surge in Airbnbs and Booking.com and these short-term rental models. So yeah, 5+ year hold, I would say go for a 10-year hold. Maybe use the property for your own self whenever you're coming and visiting the emirate. It's always good to get down the building, be down directly on the beach, take a nice swim down the beach, and have a sunbath. So it's a great investment to be looking at.
Amazing. Good. Okay, so next question I've got here is Israel Sierra. How do I get a loan living in the United States of America? So again, I have some ideas, but I shall ask Nauman to go ahead and answer that one.
Yes, hi. Thanks, Mario. Look, if you're looking for a ready property, UAE banks offer loans to the non-residents as well. You don't necessarily need to be here or a resident of United Arab Emirates to avail a loan here. The down payment percentages can vary depending on your profile. Normally in UAE, the banks offer to the residents like 80% financing. So that's 80-20 LTV. But for the non-resident, it can vary based on your profile. It depends on certain factors, whether you are self-employed, whether you are employed, how good is the profile. And banks can lend up to 70% of the value of the property. So we can definitely help you with that. And we'll send you more details on this in your private message, like how much, what are the documents required. And we also have partnership with several banks and also with the mortgage providers, private mortgage brokers as well, to help you in this. So definitely we'll be assisting you in this one.
Perfect. Thank you, Nauman. Okay, if we can go now to the next person who raised his hand. please go ahead and click on it. So we have Ravi Dam. Hello, Ravi. Welcome. First of all, just tell us where you're listening and watching this from, and then please go ahead and ask your question.
Hi, thanks for allowing me to voice out, and it's great to be a part of this webinar. I just have a short question from my end because I'm located in India, and last year itself, I have become an investor in Dubai, and I have invested in Sky Hall Binghati, which is located in Business Bay. As I have been in the real estate market in India, I'm well aware of how it works over here. With the war or any undue experiences which Dubai experiences, how do you think is it going to be for my property over there? And in case of resale or on rental, how is it going to work out for me? Because I got thought of doing a resale and doing a reinvestment for it.
Okay, so I will ask perhaps both the gentlemen to again talk on this. Maybe Nauman from the point of view of Bengati and Business Bay, Chinoy from the fact that it's still off plan. But I have a question. When is the handover for this particular project?
That's going to get handed over in August this year.
Right. So it's okay. So it's quite close. Now, of course, I was kind of hoping that it was going to be in 2 or 3 years' time, and I would have said, of course, everything is amazing by then. But August of this year, I mean, that's right bang in the summer, and of course, summer does tend to quieten down a little bit for us, purely and simply that the heat here does mean that a lot of people move to more moderate climates for the summer. That's not to say deals are not being done still, they are, but it's just kind of less people to obviously talk to about. I hope that in the next few days, few weeks, we've come to an agreement whereby, there is no crisis, so that we can get back to the normality, so that by August you can make an informed decision. But perhaps I can just bring in Chinoy first of all to talk about Sky Hall Bengati, and then perhaps Nauman, if you could also mention, Business Bay. It's a great area. It's got water there. It's got everything. So I'm sure he'll be fine. But Chinoy, if you can chip in.
Yeah, sure. Hi, Ravi. Thank you for the question, Ravi. So what I can do is I can give you an idea on what can be done. So if your handover is nearing in August, you can definitely pay off your property. Tourism here has definitely taken a hit, and it's something that we will tell you very transparently, but it's not something that will take months or years to bounce back. UAE and the ecosystem of tourism that has been offered here. And I'm sure if you live in India, it's a 3 hour flight. I'm also from India. So, you can come in and out anytime, and the tourism here bounces back really, really fast. So, from a short-term rental point of view, converting your property into a holiday home, because your location is Business Bay, it's a very lucrative proposition. Keep in mind that Business Bay and downtown is a prime area. It's not something which is up and coming. So this could be one option for you while you rent out your property. Since you bought it under off plan, I'm sure you got a very good price. If it's a 1 bedroom, 2 bedroom, or a 3 bedroom, if you have an asset which is a 2 bedroom or a 3 bedroom, I would say within this time, go in for a long-term rental model, which is where you can rent out your property for an entire year and have some cash coming into you, have some cash coming back to you. While at the same time, when you do so, you can always give your property back to the bank and pull some equity out of it and have some cash for you to acquire the next property that you can. So this way, you actually do not have to resell your property, but still using the same property that you have, you can actually move on to your next investment. That could be one idea. From a selling point of view, if you really want to exit and move on to the next, to be really honest, I mean, Business Bay as an area used to be a very good area where people used to take an exit at 60%, 70%, or even double their equity or the money that they used to. But now, due to the supply that has entered into the market, there is a lot of competition in terms of handovers. And to be really fair with you, I mean, 2026 is the year where you will see more than 80,000 apartments being handed over, out of which I would say 30% or 20% would be in Business Bay as an area. because back in 2022, when all these projects launched, Business Bay and JVC were the top selling areas where a lot of off-plan launches happen. And I'm sure you acquired your property during that time. So in order to mitigate that, what I could say is the smart portfolio move would be to pay off your property, put it on a short-term rental model. You can always get in touch with us. We can put you in touch with our sister company, which is called A-Livin, which can convert your property, take all the hassle from your head, convert it into a holiday home, and start generating that passive income rental for you. And trust me, even without tourism, there is still a lot of people that do rent out on short term. And why do I say that? Is because a lot of people that move to UAE for the new jobs, initially in the start, they do not get their Emirates ID. In order to get a long-term rental, like a yearly rental, you need an Emirates ID. So what do? They go and rent any property nearby their offices, like downtown Business Bay, for 3 months, 4 months. There are a lot of digital nomads that have been moving here, people, those who move freely around the world, and they do online business. A lot of influencers move here. So this is a very digital tech savvy ecosystem where people actually do not have to go to offices, but they still want to be in the ecosystem of UAE and Dubai. So we can always find a tenant for you for 3 months straight, where you can make more on your money on your long versus your long-term rental. And once the market stabilizes, you can always take an exit. Norman is here. He can obviously give you an evaluation in terms of how the prices are moving. But I feel the smart portfolio move would be to pay off your property, convert it into a holiday home, and pull equity out and move on to the next investment, maybe a small studio that you can take, which can again give you a 7 to 8% yield. But then again, both these properties are paying them off from the money that you've already invested, and you do not have to pull more money out from India into into the UAE.
Well, just a couple of things I want to add. I think CK has covered all the bases, but it's entirely up to you. What decision do you make? He has given you all the options. But what I can add here is if you want to sell this property, the handover is the best time to sell the property where you will get the best out of your property. Because the mortgage buyers, they come into play. So you have a couple of options. And again, as I said before, we can have a look at your property, give you a perfect or a comprehensive valuation of your property. And then you can decide whether it's a good idea and we'll give you all the perspective, like what would be the rental value, what would be the resale value. And again, a very interesting point which CK mentioned, taking the equity out of your investment and going back, holding the asset, and at the same time investing again with the same equity. So again, we will look forward to hear from you and definitely provide you with all the details and the reports. Thanks.
Amazing. Thank you. Now, hopefully, Ravi, has that answered your question?
Yes, to a huge extent it has. And just to let you all know, it's a studio because this was the first investment which I had done. It's a studio which I purchased, but it is Bengati facing.
Okay.
Well, in that case, Ravi, then you are even more safe. So the reason why I say that, because studios in short-term rentals operate on 95% plus occupancy rates. And studios have the highest demand in an area like Business Bay, where there are more than 8,000 offices. So, I mean, you literally have nothing to worry about. So get in touch with our team right after this call. We'll be happy to, provide you, as Noman said, with a comprehensive evaluation and obviously take care of A to Z rentals for you.
Superb. Thanks a ton for it.
Thank you, Ravi. Thank you. Right, we're now going to go to the next question. I think, again, Chinoy from an off-plan point of view, and Nauman, you can answer this also from a secondary point of view. Is Dubai South still hot, attractive for investors? Well, personally, I think it is. It's an amazing place. We went down there as Allegiance. We went down to have a look at the site, and there is so much going for it. You think it's so far away if you live in the city, but actually the connectivity is amazing. The metro is there. There's obviously the exhibition centers are going to relocate from the center of the DIFC to there. So for me, it's a yes. But Chinoy, if you can maybe talk about the off-plan side,
Sure.
then Nauman, you can talk about the ready stock, because there's still a lot of ready stock there.
Absolutely, Mario. And you're absolutely right. I mean, Dubai South is definitely going to be, they're calling it the new center of Dubai, because the Dubai is actually moving towards south, where the new airport is coming in, which will have more than 400 gates to accommodate more than 260 million passengers per year. Currently, the airport where we have it stands in a position which does not have the capacity to accommodate that. Now, why you should be looking at Dubai South, and is it still hot and attractive? Yes. As we always say in real estate, that the money is always made in the sand. It's not made when everything is up. So it is a very promising up and coming location. Tier one developers, Dubai South as a government entity themselves, MR, DAMAC, you talk about all these government-backed developers, and the top private developers are coming up with master communities. In fact, MR has 4 master communities within that location. And a very interesting statistic, Moksha, I would like to share with you is that Dubai South last year had around 3 million tourists. Dubai last year had 20.3 million tourists. 20 million tourists, and 3 million came from that. So that means 10% of the tourism that came in went there. And why is that? Which Mario touched based upon, is the new Dubai Exhibition Center. Dubai hosts one of the world's biggest tech conferences, which is the GITEX. Dubai hosts the biggest F&B conferences, which is the Gulf Food Festival, where millions and millions of exhibitors, traders, buyers, sellers from the trading industry come from all over different parts of the world to exchange products and exchange ideas. So earlier, and as of now, it used to happen always for the last 10 years. All these exhibitions were happening in the downtown, in the World Trade Center area. But now, again, because of the increasing footfall, they had to make a dedicated space for it. So, what could be the right attractive investment? I mean, again, totally goes down to what kind of an investor you have and what kind of cash flow appetite that you have. And you can look at multiple investments. A 1 bedroom, a studio, a 2 bedroom, 3 bedroom, there is definitely a future consumption audience for it. And it definitely, to answer your question straightly, it definitely stands out as a very good investment, because these conferences and these exhibitions are not going to stop, and they're only going to increase going further because of the D33 agenda and the D40 agenda that the government has to increase the trade, increase the AI governance, increase the more and more companies coming in, and they have the ecosystem there to build the new business parks, which currently right now are only in 2 or 3 locations like Business Bay or Dubai Media City, and then we need more for the population incoming. So Moksha, to answer, yes, it's definitely attractive, and we do deal in that area. You can get in touch with our team to have a comprehensive analysis in terms of what are the off-plan opportunities there.
Do you have anything to add, Nauman? I think there's the one
Well,
thing we forgot.
just one thing. I mean, we have CK here, so he's just on it all the time. So I think the infrastructure is still there. I mean, it's already there rather. We have new schools coming in over there. We have new hospitals coming in over there. And we always say that money is made where the government is heading. Dubai government has complete focus in that area. We have seen already the biggest airport is operational. CK mentioned about what's coming in new over there. So there's no sand over there, as CK mentioned. I have to politely disagree. It's already a infrastructure which is already in place. It's just, and there's a lot of development which are already being launched, and we'll see lots and lots of more movement towards that area. So from my point of view, it's of course definitely a good one.
Amazing. So, Moksha, I hope that answered your question. The one thing, I mean, Nauman did touch upon, which I forgot to say, and so did Chinoy, the world's largest airport is there. And whilst he did mention it, we cannot think about a better area, because that's going to bring a lot of employment to the area. And eventually, I think it's 2030, between 32, 33, something like this. DXB will wind down and everything will leave from Al Maktoum Airport. And the capacity is, I believe, over 200 million, 250 million, whereas we were at capacity at sort of 100 million at DXB. So for that reason alone, it's still a very hot area. So hopefully we've answered your question. Now I'm going to go to one more question, but before I do that, I want to let you know that we're running a poll, and I really would appreciate it if when you see the questions coming up, We're going to ask you three separate questions on the polls. In fact, one is already there. If you can please answer your question so it gives us an idea exactly what sort of investors you are, how you have invested, and obviously it'll help us to then help you going forward. So for those who haven't seen it, the first question is, how many properties do you own in the United Arab Emirates? Is it none, one, or multiple? Right, I'm going to go to the next question, which again, I'm going to bring in Nauman if he can. Again, it's from Anonymous. What is the cost for a one-bedroom in JVC for property that will be ready next year? I think he's asking what's the price rather than the cost.
Well,
What would the price be? Yeah.
Thank you, Mario, and thank you very much for your question. What I'm assuming here is you already own a property, which is going to be handed over in a year's time in JVC. I think more details, if we can get more details, I think we can answer this in a better manner, but I can just generally, I can touch upon it. Now, if it is a mid-range property, that would be valued around 1 million to 1.2 million. And if it is a premium segment, it is 1.2 to 1.35. This is what I'm talking about right now. And again, it depends on which project is this, but generally speaking, this is the value over there. If it is a mid-range, I've given you the figure, and if it is a high-range property or a premium property, you can expect around 1.3 to 1.4 million. But again, we would be happy to give you a good evaluation on this one if you know like what exactly is the property, and definitely we'll get in touch with you for this.
And the reason Nauman says that for the person that asked this question is because JVC as an area it's a concentration of different developers, different ways of building. And that's why he says, perhaps a higher end or a medium end. Also, the location is very important in terms of where it is in JVC. And not just that, if we're talking apartments, we're generally talking, blocks of apartments. Where is it, in the building? Is it a high floor, a low floor? Does it have a view? Is it near a park? There are so many different anomalies. So I really would urge you to write in and request that Nauman gets in touch with you so that we can actually answer that question very, very accurately. Now, before I go to the next question, I believe there is also someone who's put their hand up. Have I got that right or not? Maybe I've not got that. Oh, yes, I have. Harry Singh. Welcome, Harry. If you can start by telling us where you are watching us from, and then go ahead with your question, please.
Yeah, the last question you took was my question. So the property is in LSC2 near Central Mall, it's called. And I just wanted to know it's one bedroom with park view and it's on 10th floor. So I just want to know what is the future for this and is it the right time to sell and it'll be ready. I was told it was Q4 of 2027.
Okay. Well, Nauman, if you can answer that.
Nauman, yeah, he can
Overall, thanks, Harry. Overall, JVC is going to have some new development. There's a lot of, kind of information you get over the internet and generally as well that there's going to be a lot of oversupply in that area. But I slightly disagree with that. Considering the new developments coming in, there will be two direct exits from JVC onto Al Khail Road and towards 311 as well, which will solve a lot of problems for the exits. And at the same time, there are different and location. You cannot take away the location from JVC. I mean, of course, there are going to be infrastructure in place to solve all the problems which we have right now. But again, as I said, we will definitely give you comprehensive analysis on where your property is heading and what is the value right now. And based on that, of course, definitely you can make a decision whether to hold on to that asset or get into a short-term renting market or probably the long-term renting market. Hope this answers.
I'd just like to add something for you, Harry, here.
Thanks. Yeah.
Harry, just for your information, I mean, the property that you're holding is definitely a great one. And I'll share a very personalized statistic for you. We are Allegiance and we have over 200 employees in 8 different countries, out of which our headquarters are based here in Dubai. Now, in our Dubai headquarters, we have over 110 employees. 90% of our employees live in JVC. They rent in JVC. Why? Because our office is in Motor City, which is where Noman is speaking from. He's literally sitting in the office right now and speaking to you from. Not only that, apart from that, our office is in Control Tower in Motor City. It has over 200 offices in just that area. Motor City does not even have the supply, does not even have the ecosystem apart from some cafes, restaurants that are there. But JVC, not only from a mall to a park and to an entire area which Mario was referring to. So be assured, I mean, from the perspective of rental, it's definitely a great property that you're holding, and you're right, very close to the Circle Mall. Anything that is closer to the Circle Mall definitely has a very high rental value if you are closer to the entry and exit points, which Noman was mentioning about. JVC as a location and what he said, oversupply, I also completely agree with Noman. There is no oversupply. It's just more and more demand that will be coming in the future. And that is the reason why the government, JVC actually, the entire land was owned by Nakheel, which is Dubai Holdings, which is the government, and they sold the plots to private developers. So from a perspective of the entire master plan of that area, you will definitely see your property prices going up. It is definitely a mid to long term hold. It is not a short term hold anymore because JVC has definitely gained a premium over the years. So what I would say is 2030 or 2029 could be a very good area, very good time for you to exit. Or you could also apply the same strategy on your property, take your handover in 2027, pay it off, pull equity out, and invest into another property within that area. I hope that helps you, Harry.
Yeah, thank.
Amazing. Thank you, Harry, for your question. Next question. I'm going to bully you both and probably take this myself, but please step in if you have something to say. This is via, but before I ask that one, here's the second poll, ladies and gentlemen. I'll just read it out to you. Where in the UAE have you invested? Is it Dubai, Abu Dhabi, Ras Al Khaimah, Sharjah? Actually, we should have put Al Quwain on there as well. But anyway, if you can just answer that. That's the second poll. I'll go ahead and answer this one from Shektar. How are fractional room ownership investments likely to do or be affected? Well, first of all, just so that people understand, this year slash last year, fractional ownership started to come to the fore. And I think these institutions and developers, along with the government, have actually got together to offer this to individuals. And personally, I think it's an amazing opportunity. And I think the reason they've done it is because clearly it's opened up the real estate market to pretty much everyone now, because there are a couple of companies that I know that do it. One is Pripco Blocks, which is actually owned by Damac anyway, so it has the backing of Damac, and I believe the second one is Stake. We're more attached to Pripco Blocks because we know more about it. My understanding there is that you have a minimum investment of 500 dirhams. And that buys you a fraction of the investment, and so it hasn't become mainstream yet. You have to do this via the land department. I know of 3 units that have been sold. The first one took less than a minute to sell. The other one took even quicker. So they're oversubscribed. So to be honest with you, the investment itself, because it opens itself up to a bigger market share, I think will be fine. Obviously, if prices do soften going forward, and I'm talking about generally the market now, because this conflict, let's say, doesn't resolve itself and carries on for longer periods, then even so, it's never going to come down to the levels of what they're being offered here. Now, if you're okay with owning a portion, whether it's a quarter, an eighth, a 16th, a 32, or whatever, then you will earn from that investment by the portion that you've actually put in. It's easy to get in. It's easy to get out in terms of selling, because you just sell back to to the investment, as it were, and there are always people waiting. So I don't know whether you asked this question because you own one already or you're thinking of owning one. My answer would be if you cannot get on to owning the property 100% yourself. By that I mean only you or your spouse or whatever on the title deed. Then this is an excellent way to actually get onto the property ladder here in the UAE and grab a slice of, I'm going to say it, guys, the Dubai dream, because we are in a situation right now that I am 100% confident that given a resolution and a bit of time, we will come out of this. And it will be individuals that will look back at this time and actually say, just like they did at COVID, I wish I'd invested in Dubai or the UAE or Ras Al Khaimah or Abu Dhabi at the time of that conflict. And that's why I urged you, please, for all the reasons that I mentioned, not because I'm trying to be a salesman at all. No, I'm trying to be an advisor. And my advice is risk it, because honestly, you will reap the benefit later on. Okay. Hopefully that's answered that question. I'm going to go to another one, and this one I'm going to open it up to the gentleman as well. Again, from an anonymous attendee. The dirham is pegged to the US dollar. Yep, we know that. It says here the dollar will lose value as per the scenario. Well, I don't know, you say that, but the dollar's actually gone up right now. But anyway, so the property value goes down as well. So what do you have to say? Noman, I'll come to you first this time because I've been going to Chinoy first of all. Obviously, we are pegged to the dollar, and yes, whatever goes on is, we are going to be affected. But if we're talking purely and simply about the dollar itself, this person here is expecting the property value to go down. What would you have to say?
Oh, well, we hear this a lot. We get this a lot from not just now. This is a regular thing that because of the currency being pegged to USD, if USD gets loses the value or gets weaker, we will lose the value, or properties will lose the value. That hasn't been the case. It hasn't happened so far. I mean, on the other hand, we're getting benefit out of it. That one of the strongest point of properties here is it is pegged to its. I don't think it's a weak point; it's a strong point. And as Mario mentioned, I think it's on the right side of it. The value is getting better. Again, as I mentioned, we keep on hearing this, but it hasn't happened until now, and we don't expect this to happen.
Chinoy, do you have anything to add?
Well, I would definitely like to stay away from the geopolitical questions, but definitely just to take this up. I mean, I can answer this question with the move that America made. I mean, before all of this started, I mean, they went for Venezuela, which holds the biggest oil reserve in the world. I think more than 300 million tons of barrels. I might be wrong, but they hold the biggest oil reserve in the world. So as long as oil is selling in dollars, dollar is never going to lose its value. And all the GCC countries, they do trade their oil and gas in dollars as well. So just to help you understand from global money flow perspective, I mean, dollar is definitely not losing its value. Maybe it has gone, as Mario mentioned, and he's absolutely right, the dollar value has gone up. But again, the stability of this region is that the dollar value is pegged to dirhams. And that is also one of the biggest reasons why American investors, they see a lot of value investing into the UAE. I mean, we have seen fluctuations with pounds, we've seen fluctuations with Australian dollar, the euros. I mean, right now for British investors, it's also a dream scenario where, the pound is more than 5 dirhams. So it's almost 5 dirhams. And I would say if I go 7 to 8 months back, it was around 4.6, 4.4, 4.5 dirhams of its original value. So I mean, even we have seen from an off-plan perspective where a lot of investors, those who firmly believe in the market, they are using the currency fluctuation to use it to their advantage and making their payments early for their next installments to take benefit from just the currency fluctuations. So again, that being said, from the global money flow perspective, because the oil and the gas, they control the value of the currencies, we do not see the dollar value going down anytime in the near future.
Okay, so hopefully that's answered that question. I understand there's another person who's raised their hand, so please, if you'd like to join us, we can then let you in. Marsad, first of all, if you can just tell us where you're from. I'm loving the picture, nice and green, and where you're from, and if you could like to ask the question. Thank you.
Hello.
Hi.
Hello. My name is Marshad. I am from India. And thank you for your valuable and strategical presentation. It's a very good information for us. Actually, I am first time investor for in Dubai. Uh, I actually am 2 3 years. I am looking for to invest in Dubai. I am very interested. The recently the war issue is coming, and I have so many confusions for that. I have so many friends in Dubai also, and what the actually the war issue is going on currently. This issue is not solved, and what is the future of Dubai? And actually, I plan to invest, but how my the current situation is very fear about that. I am only first time investor of there. Then the war issue it's not solved. What is the future of Dubai? Then you have any prediction of the issue it's going on? It will be solved, and what kind of this investment it's good. Actually, your presentation is it's very good at the right time to invest for this property. But I am first time investor. I have very fear about that. Please give me some solution for that.
Okay, Marshad, thank you for your question. It was quite a loaded question, and I think we will all have to, look, we're not magicians. We cannot predict the future, but we can look at the past. And from my point of view, the first thing you're saying is, if we get a resolution, what if we don't get a resolution? This war, this conflict, will end. It's not going to go on forever. So the first thing, obviously, we don't know how long it's going to last. And you've got to remember that whilst, yes, we are affected, it is not our war. And by that, I mean, it is not us attacking Iran. So whilst we are the easy target, and, there's many reasons why maybe that is the case, I do believe that a resolution will be found sooner or later. So the question of what if we don't find we will find a resolution. I guarantee that a resolution will be found. That's my view on it. But looking back, I'm lucky or unlucky, depending on which way you want to look at it. I have been in Dubai now for close to 18 years. This August will be 18 years. And during that time, I have seen effectively, if we include this, sort of 3 or 4 pressures on the market. The first one being the financial crash of 2008, which was a completely different scenario, but the sentiment was there. People they couldn't get mortgages, there was no liquidity, and people stopped buying, obviously, and hence the property market literally fell down in a matter of just 2 or 3 months, very, very steeply. But you've got to look at the history from that. It did bounce back. And actually bounced back stronger. So that was the first one. The second one, if you like, was the house price deflation from 2014 to 2020. That was a 6-year period where house prices actually came down purely and simply that measures were put in place because that was a bubble that was bursting and the government had to step in. It took 6 years for house prices to come down 40%. Now, in 2020, we had COVID. That was the year that we should have recovered from that past growth, that past reduction down in the housing market. But then COVID came. And then saw in the first year after COVID, from 21 to 22, we regained the losses of that 6 years in the first year. And then from then on in, 23 was better than 22, 24 was better than 23, and 25 was better than 24. Now, we are now in another situation. Yes, we are. And how long it's going to take? Nobody knows. I don't think any one of us will be able to commit to yes, it's good. I don't even think Trump knows, to be honest with you. Although, he has got this ramp now, thanks to the Pakistanis, to try and bring this together and to an agreement. What happens after this agreement? Again, nobody knows. But rest assured that we entered into this conflict or this chaos in a much, much, much stronger situation than we did with the other two. So are we going to recover? 100% we are. When? That's the question mark. But even so, as Chinoy, I think, alluded to before, we react much quicker than a lot of countries. And again, the government meets, the federal government meets, and the local government meets in order to say, right, how are we going to improve the lives of the residents? They do that all the time. Last year, the first time buyer program was given to stimulate the market. It didn't need stimulating, in my opinion, but they did it, which meant that as long as you were 18 years of age and you hadn't bought in Dubai, but was a resident of the UAE, you were eligible for better mortgage rates, access to inventory that others wouldn't have, deferment of the 4%, and in fact, payment over a longer period of time, and other benefits. Now, if they want to stimulate, all they have to do is say, right, that first time buyer thing, we're going to open it up to the world. Now, they haven't done that. That's just me guessing. But I'm just saying that there will be other things to stimulate the market. The government will not sit still. We're innovative in technology, in healthcare, in education. Everybody wants to live here. And people have said, oh, one or two have gone away. To where? They're all going to be coming back. I guarantee you. You want to live in America? Listen, I don't want to be political here, but I know that there are situations in America regarding guns. I'm talking safety now. In the UK, I'm Italian, but I come from the UK. You're more likely to be a victim of crime or be mugged or knife crime. Europe is a disaster. Where are you going to go? So despite the fact that Dubai is today perhaps not in a great place, actually, I say again, it's in a good place because I know we're safe. Everything works. We just need that sentiment to come back. And I guarantee you that Dubai has done it before. They'll do it again. They'll get on that world stage. And all of a sudden, the tourism will come back. It'll take time, but the tourism will come back. That will then start filling up. People will then start to say again, oh, I like this place. Let's think about investing. And for those who are first-time buyer investors now, don't wait for all those masses to come because they're coming. Whether it's this year or next year, they are coming. Think about it now.
Okay.
I don't know if
Actually,
that's helped.
thank you, Mario.
No
Actually,
worries.
I have one other doubt also. You are giving for a valuable information for us. Actually, I'm looking for the Dubai market recently to 4 to 5 months. Actually, I am planning to invest there, but the property price, it's not that much. Offer anything else that provided the Ramzan time DLD waiver is also there. Then this time also DLD waiver is also another, not that much offer, only 2%, that kind of only. Actually, I think we can wait. The war is not solved, and we can wait sometime. Also, the price will low. We already see that the COVID time also the price very down for that. That time in my some friends also they're invested. I think we can wait and then invest. That is better, I think. Is it right?
Yeah, look, no problem. Maybe this isn't the platform to do that. What I would urge you to do, organize with us a one-to-one where we can give you much more information. We can give you all the information you want, but I'll just touch upon one thing. What you mentioned there was exactly right. The minute the missile started flying, everybody thought, in fact, the very first day, and all of us did, we had people saying, "Do you have any distressed deals?" As if somebody flicked a switch and all of a sudden everybody's wanting to pile out and sell at 50% off. That's not Dubai anymore. Yes, you will find the odd one or two where somebody perhaps is leveraged, where somebody needs to do something, but it isn't because of this chaos. I guarantee you. And that is why you're not finding the sort of offers that you were perhaps expecting. You said you had DLD waiver before, you've got it now. Absolutely. But I mean, developers are, as Chinoy's saying, they're listening to us. So, you can walk into a sales center and actually be greeted without having to queue up or anything. So you have a bit more time. But actually speaking, the product is still as good as it was 6 weeks ago. Now you're just able to grab hold of some stuff that maybe you weren't able to before. So that's why I'm saying look at it now. But in terms of prices down, especially dare I say with developers, no, they're not offering any reductions, like I said before. But Marshad, please write in and let's do a one-to-one, and we can.
Mario, I will just add for
Yeah.
Marshad right here, because Marshad mentioned a very interesting point that back in COVID, his friends bought
Yeah.
and they got the returns. And Marshad, now you are in a pickle that you fell behind your friends. But there is a very famous saying in the real estate fraternity, and all the investors are those who are second time investing or third time investing, they're aware about it, is that you don't wait to buy real estate. You buy real estate and then you wait. So no matter today, if you are in a situation where I can understand and I very well resonate with you, that you might want to make the right choice because this is your hard-earned money, and it's not like the abundance of money that you have left around, and you want to put it in the right place where it should make money for you. If you feel real estate is the right asset class for you, then definitely there is never going to be the right time. You have to start at any point given in time. Now, if your friends got the DLD waivers back in 2021 and 2022, you can just look from a lens where you're back in 2021 and 2022. It's just you're getting the same offer. So you're not missing out actually on anything. It's just the time is different. So if they bought a one bedroom in 2021 for, let's say, 1.5 million dirhams, and today you are getting it for 2 million dirhams, then definitely 3 or 4 years from now, that price will reach 2.5 to 3 million dirhams. So if you wait, you're going to pay the higher price. So again, this is something we can always take further into a more detailed rundown in terms of comparing different communities and comparing different statistics from 2021 versus 2026 and what your outlook would look like for 2030. And we can definitely guide you on the investment journey further. But again, I'll just sum it up for you. Don't wait to buy. Buy and then wait. That's the secret of making money in real estate.
Marshad,
Okay.
is
Okay,
that
sure, sure. We
that
can
answer
sit
your
one to
question?
one. Yeah, yeah. Okay. Actually, I have this type of confusions. We can sit with one to one and we can clear it.
That's right.
Okay.
Because I need
Then
to I
I
need
am
to get on and
interested for
answer
that,
more
but
questions.
I actually I want to invest very safe and secure. This is my or some of
Don't
the
worry, Marshad. We
important
will guide
aspects
you.
that I
We
can.
will guide you on that. And right after this call, you will receive a link where you can leave your details with us, and our team will get in touch with you. Somebody from Mario's team or my team and Noman's team will definitely be in touch with you, and we'll make sure that you are guided with the right guidance.
Okay, okay, thank you.
Amazing. Thank you, Marshad. I want to go to this one. I'll ask you, Chinoy, for your thoughts. But I have thoughts myself as well, so I'll just mention a bit. From Julian, he says, what's the possibility that the UAE approves another casino gaming license, let's say in Dubai or Abu Dhabi, and it decimates the investment uniqueness and incentive to put money in Ras Al Khaimah? Well, just my 1 second worth. Julian, just to let you know, after Ras Al Khaimah, and Ras Al Khaimah, I believe, has got the license for, correct me if I'm not wrong, Janoy, at least for 5 years, or at least Win has for 5 years. Whether there's any more, I don't know. And then after that, it is actually going to Abu Dhabi for however long, whether it's another 5 years or perhaps even 10 years. So Dubai will not actually get the casino at the second bite of the cherry. If they get it, they'll get it at the third bite of the cherry. So it is something that is happening 100%. But in terms of what the investment will do for Ras Al Khaimah, well, Ras Al Khaimah, in my opinion, is the OG, or will be the OG at the time, because they came in first, as it were. And by the time Abu Dhabi gets on board, it will be super established. So it'll still be a good incentive to buy in RAK. That's my tuppence worth. But, Chinoy, if you'd like to go ahead.
Well, yeah, sure. Julian, what we have to understand is that there is a particular reason why the government, for its pioneer casino gaming concept, they chose Ras Al Khaimah as an emirate. If they wanted, they could have definitely done it in Dubai. But the reason why they did it is because the gaming industry, and especially casino as a gaming concept, brings a lot of different kinds of flavors to a city. It brings a lot of different kind of lifestyle to a city. So I'm assuming, Julian, you're from the United States. New York does not have the Wynn Casino, right? You go to Vegas for that. Same way, for China, you've got Macau as a established market. I'm not talking about the backdoor casinos just on the ground floor or the basements of clubs, but I'm talking about an established gaming market which does billions and billions of revenue. Now, UAE was seeing, especially Dubai, was seeing that Dubai is not in a state to handle 20 million tourists every year because of that's why whenever somebody visits here, you find the hotel prices to be very competitive with the world because the hotels are very undersupplied. The housing is very undersupplied. A lot of people put their properties on Airbnbs and booking.coms and the short-term rental models to generate that revenue. So casino as an industry is always kept away from the financial capitals. Even when it's coming in Abu Dhabi, it's right not in the middle of the Abu Dhabi city. It's going to be an up and coming area of what the rumors that we have heard for now. It is not officially confirmed on paper, which is an area called Gantoot, which stands in between Abu Dhabi and Dubai's coastline. It's not going to be in the entrance or in the middle of the city. Now, yes, everybody has heard about the rumors of the MGM opening in Dubai, which is definitely happening as a resort. But the license for the casino gaming has not been given. It's an extended island on the coastline of Dubai, very close to Burj Al Arab Hotel, but the license has not been granted there because the government, how they see the entire country and different emirates, Abu Dhabi is more mid cap, large cap companies, and it's more focused towards family living, whereas Dubai is more entrepreneurial and bringing in a lot of, influencers, a lot of families in, a lot of small cap, mid cap, and even large cap businesses in. So I would definitely, been living in this emirate for a long time and following the vision of uh, our visionary leader. I definitely do not see that happening and disrupting the lifestyles of Dubai and Abu Dhabi as financial cities. What I see is Ras Al Khaimah is a city which is actually completing the UAE tourism ecosystem because this was the missing piece in the puzzle. And that's the exact reason why they kept it towards a separate emirate, which has good, pristine waters and has everything that Dubai has to offer. So I hope that answers your question, Julian.
Okay, so just one other one here is you guys mentioned pretty much all the major developers in Dubai other than Danube. Is there any reason that Danube is not part of your portfolio? Well, I'll answer that one because I answered the first question. Anonymous, I couldn't list all of them. I did say that we deal with pretty much all the developers in Dubai, from the well-known ones down to ones that even we haven't even heard of. Danube is obviously something we have heard of. They are a success story. They started out, as a lighting company, I believe. They were the contractors, and now they're very, very successful. And so, I didn't mention it purely and simply that it wasn't one of those things there, but we do deal with them. So basically, we cover everything and everyone because we put them to the investors. At the end of the day, we can advise, we can explain what each developer offers. But it's also about the project, the build quality, whether they do hand over, whether they are delayed, what are the amenities? There's many facets to this. And also, why are you buying? What's the exit strategy? Is it is it a buy and hold? Is it a buy and sell? That all those things take into consideration. And of course, there are lower tier developers, mid and higher. So we will deal with whatever the market is out there, and we will offer and give advice. But ultimately, it's up to the investor, who they buy. Another question here, but before I ask that, here's the I believe the third and final poll. If you can answer this one, how much is your property worth in your opinion? Is it between 1 and 3 million, 3 and 5 million, or 5 million plus? If you could answer that, that would be great. How much time usually does it take to get the Okud from the DLD? I'll throw that to Chinoy. We all know the answer, but Chinoy, as the off-plan gentleman, can answer that one.
Well, Ukud usually arrives in 30 to 45 days after the SPA signing, because the municipality of that particular emirate has to receive the SPA from the developer, and then they issue the Ukud. For everybody else joining in, Ukud is also known as the pre-title deed document, which declares the ownership of you as an individual for a particular property during the phase of construction. And once the construction is completed, and when you complete your handover payment, you are issued a proper title deed document for which you have actually paid the title deed payment, which is the DLD fees or the RAC fees or the ADM fees in Abu Dhabi. So 30 to 45 days from the SPA signing, you should definitely be expecting it. You should always follow up with your developer or your broker that has helped you or assisted you in the purchase, and he can follow up with the developer on your behalf.
Amazing. I'm going to come to Noman in a second. There's a question here by Sheikh Hussein, which I'm going to ask you, Noman, to answer. But before that, I think we should tackle this one. What would be the benefits between investing with Allegiance or directly with the developer? Well, my tuppence on that is that we have spent years and years and years to develop the relationships that you as investors will benefit from coming through Allegiance. There is a fallacy to think that if people go directly to developers, they will either get better deals or better rates. That is simply not true at all. I will guarantee you that, because they take no notice of that. They need agents to bring clients to them. And if we take, for example, Damac, if you went direct to Damac for a specific unit, you are unlikely, and I'll just repeat that, you are unlikely to get it. Whereas if you come through us, you are likely to get it. Now, I know there's lots of caveats there, but that's all based on the relationships that we have built. Now, at the beginning of this seminar, I did mention that we're number one with Damac. We're in the top 5 with Shoba. We're the number 1 with Ras Al Khaimah RAC Properties, which is part of the government. Major developers as well. Mudon and Ohana in Abu Dhabi, and many others as well. We cannot be, number 1 everywhere. That's impossible. But the relationships that we have and that we've built up over the years through individuals like myself, Nauman, and Chinoy, and others that work at Allegiance will give us access to inventory that you would not get as an individual going there, because your buying power compared to our buying power is different. And that is why I would say use us. We're working for you at the end of the day, whereas you would just be one of thousands of people that a developer deals with and have no say in literally anything, whereas you're more likely to get a better unit at a better price because we'll use our leverage to get that. Okay, so hopefully that's...
I'll also answer this question for the entire audience from a perspective of why you should be dealing with Allegiance. I think there is definitely certain legs that a lot of people miss out with Allegiance Real Estate in the Dubai real estate market, which is Allegiance is one of the only companies to have 6 global offices. So if you are in Paris, if you are in Sydney, if you are in Tokyo, if you are in Slovenia, if you are, and soon we are doing our expansion in the United States as well. If you are in any one of those countries, you can always walk in for a coffee and cake in our office. So you're not dealing with a contact on WhatsApp. You are actually dealing with on-ground support. Next, we provide you with an entire ecosystem. Developers usually do not have property management services. Once your property is ready, whom you're going to reach out to? So Allegiance will be there from start to the end for you to take care of your entire property portfolio. Next is, unlike the developers who have only one product to sell, we can give you a comparative analysis against each product, because we are in partnership with developers, but we are loyal to our clients. So that's the major difference that I would say that, why you should be dealing with somebody at Allegiance and not directly with the developers. I think the price point Mario rightly mentioned, there is not going to be any difference in the price. The same price that you get from developers is this. Another detailed point that I can tell you is that none of us at Allegiance draw a salary. All right. So we are not like developer sales agents that work on a salary and they can change their jobs. Our relationships to our client matters everything for us and for people working in our team. So everybody here works honestly for their client, because when you make money is when we make money. If we are able to give you a profitable exit or rent out your property for a good ROI, and if you are happy, what is the next thing that you're going to do? You're going to refer your brother, your friend, your sister. And that's the business that we are in. So I hope we are able to help you understand that how we at Allegiance operate very differently from the entire market.
Do you have anything to add, Nauman? Or
No, it'll be fine. I think we can
go
move
to Sheikh's
towards
question?
yeah, Sheikh question. Yeah, as we mentioned earlier.
Okay.
Go
So
ahead.
is mortgage available for off-plan properties still under development, e.g. the final installment payment of 40%?
All right. So basically, there are three ways you can take mortgage here, or three purposes are served with the mortgage here. First of all, if you're buying a ready property, you can go to the bank and look for the mortgage or apply for the mortgage. Secondly, it is for the handover finance, which you have mentioned about, like to make the final payment of your property, and specifically, sorry, the banks call it the handover payment, which in your case seems like 40%. And also, there's another way to get the mortgage when your property has reached a stage of 50% construction. And that is also available on DLD website. You can go to your Dubai Rest app or DLD portal and check like what is the construction update on your property. If it has exceeded 50%, banks will be very happy to lend you or give you a mortgage on that property. And now, of course, the policies varies from resident. If you are a resident, it's a different policy, and if you are a non-resident, there's a different policy from the bank. Interest rate not necessarily has to be different, but the amount of loan or the percentage of value to the loan the bank is going to provide you will be different in these cases. But we'll be definitely happy to help you with this one, and we'll get in touch with you for this. Hope this
Amazing.
question.
Okay, so I've got another one here. This is a good one. Increasing your yield and opportunity. Is this now the time to move away from apartments and focus on villas and townhouses? And what is the best growth area with minimal saturation? What will be the top 3 things that you will give residents enough confidence to move back to the UAE with their children and families, particularly after fleeing during the conflict? So who would like to answer that one?
I'd like to take that, because something
Yep.
really struck to me was
Okay.
mentioned in the comment was that families particularly fleeing during the conflict.
I
Well,
thought, yeah.
I would like to answer that with exact data. UAE, Dubai. Let's say Dubai as an example. Okay, Dubai stands on 4 million population. As per the last data that we checked with the Ministry of Immigration and the announcement that came from them, we didn't see anybody cancel their residency and flee, right? Now, in times like this, because schools move to a work from home model, same way the businesses also, for the safety of the residents here, they move to a work from home model. Now, when it's a work from home model, let me just explain you from a very personalized experience. Okay, I'm an individual working in this market. I don't even remember the last time I took a break. I'm working 24 hours, almost 20 hours a day, and working continuously every day. Now, today, if I get the opportunity to take a pause and go back and reconnect with my family back in my country, because we are residents here and we have families in different countries, we would do that. So nobody is actually fleeing. People that have gone back, they're using the time to reconnect back with their friends, their family, because they have moved to a work from home model. Now, people fleeing in their private jets, I mean, the billionaires and the centimillionaires, they move all around the world. They have assets all around the world. They want to enjoy their best life. So were they moving in this scenario? For sure, yes. And people are moving, but they're not selling their assets and fleeing away. So fleeing is a very heavy word to be using in these kind of scenarios. I would like to definitely tell you that there has not been any instance where people have canceled their residencies or left their jobs, or there have been massive layoffs in any companies. As a matter of fact, Oracle is a company in United States which had a massive layoff. But in Dubai, we have not seen any company which had a massive layoff. So layoffs are not happening. The market is holding strong. And somebody mentioned about Tenue. Tenue founder himself announced that he's not going to be delaying anybody's salaries. And he has a staff of more than 1,000 people working for him. And so are the other leaders and the other big firms here that are standing strong with their employees. In terms of looking into apartments versus villas and townhouses, totally, again, what we say at Allegiance is that no asset is for all. It totally depends upon how do you want to approach your investment. Today, if you're sitting on 5 million dirham liquid, come to us. Let's open a conversation and we can devise a portfolio plan for you. But if you're sitting on 20% liquid and every year you plan to save, let's say 100,000 each, then there is a different investment for you. So it's not just about which is a better investment. It's about what's your long-term goal, because money can be made in different ways in real estate. There is no one blueprint to make money. It totally depends upon what's your cash flow, how much capital you want to deploy, and how do you want to take it further, and what's your time period for it. So I hope that would be my answer if Norman wants to add something to it.
Actually, Noman, what I'd like to do, look, we've only got 4 minutes left. I'm going to go to one last question, and I'm going to give each of you 2 minutes, right, to give your reason why secondary market is best or off plan is best. So we're going to go to this last question, and I'm going to come to you, Noman, first. As a new investor, would you recommend to get into the existing or stress inventory listing, or to invest in the new property which is ready in 2 or 3 years' time? So over to you, Nauman. You have 2 minutes.
Right. Okay, so let me come back again on distressed deals, which we mentioned earlier as well. Well, there is no distressed deal in the market for the property which hold value in this market. CK touched upon this before, that all the property which you are seeing as distressed deals, which are very few in number, and these are all the properties which were there already in the market, floating in the market, and they are now available at maybe another 5 to 10% less than the market. Okay, so if you're looking for something in distress, chances are you'll get something, which is going to get more distressed over a period of time. Regardless of how the market performs, that property perhaps is not in the best area, perhaps not in the best location, or perhaps it's not priced properly. That is why, that property is struggling. Now, we often see in our market that property which is in a good area, in a good location, does not come to the market and goes away in matter of seconds off market. I mean, it does not come to the portal. It does not come to the agents groups. It's straight away, it just vanishes, and there's a buyer available for that market. Now, this question, I mean, there's no comparison primary and secondary. It entirely depends on the investor's appetite, like whether you want, I mean, it's entirely an individual's decision that whether they want to get into something which is going to be ready in 3 years' time, which of course has its own benefits. And if you want to get something tangible, which you can feel right now, which you can see right now, and you can, of course, get into it. I mean, see the layout, see the community, what's on offer, and it's not something which is on the paper. So entirely, it is an investment decision which investor makes, that what suits him and what suits his style, and of course the portfolio sense.
Chinoy, 2 minutes.
I think I don't need 2 minutes. I would just wrap it up in 20 to 30 seconds because I think that's the beauty of. I will again go back to the same question: why to work with Allegiance? That's the beauty of Allegiance, where everybody thinks very synonymously and we are very client centric. So, whatever Noman said, I'm in 100% agreement. There can never be a debate about off plan or secondary. It totally depends upon the appetite of the cash flow or the cash at hand that you have. If you have good amount of liquid capital with you, I'm going to go the secondary route. Why? Because something which is ready will always have instant money making for you. There is no realized appreciation in that. It's the direct appreciation that you can make. You can leverage against that property, pull equity out. There are so many things that you can do with a ready property. So, but the only thing that I would like to highlight here is that prime real estate in prime locations is very hard to get stressed, which I think where me and Noman, we both think very synonymously. And if I have to go into a low risk prime, then obviously I would advise a client to go for an off plan, which is an under construction, getting ready 2 to 3 years. But definitely there are some off market deals, which always we as a company have access to because we are over 220 agents in 6 different countries, having a network of more than 4,000 to 5,000 clients. So you can always count on us as a company where we can definitely get you access on something which you would not find on the portals.
I just want to quickly add, just
Yep.
for a moment, Mario, I'm so sorry for that. So the off-market properties, as I mentioned before, and CK mentioned, I just want to add one point to it. Whenever a good opportunity comes into the market, not just us, any agent would always recommend to his own investor. What that does is, that for us, to win the confidence of our own investors, and of course, they'll have the first access to those properties. So if you are dealing with specialized agents, you always have the opportunity to get hold of these off-market deals.
Amazing. Well, listen, everybody, I want to thank you all for those who have stayed the course. You're marathon winners. Thank you very much. I hope what we spoke about, what we showed you, was of some use. I thoroughly enjoyed the questions and answers. And on that, I would say that at the end of this session, you will find the link where you can actually book in a one-to-one meeting with any one of us here or anybody at Allegiance, and we'll be happy to take these conversations further to add clarity and hopefully help you to make that decision as and when you are ready to do so. So until again another time, I want to say thank you. I hope you've enjoyed it, and I wish you a good afternoon, a good evening, and a good night.